Welcome. In this discussion, arranged by the experts over at Pro Tax Accountant, we're going to tackle a major headache for anyone who's self-employed. How do you manage your tax bill when your income is all over the place? We'll be looking at a really specific tool, the SA303 Form, that can literally give you back control of your cash flow. So let's dive right in.
So let's paint a picture, right? You have an absolutely fantastic year. You land a huge client, your profits just soar. Awesome. The problem? HMRC bases your advanced tax payments for this year on that previous success. So what happens when business is, well, a little quieter? You end up stuck with this massive tax bill that feels totally disconnected from what you're actually earning now.
And trust me, this is not a small problem. £5 billion. That is how much HMRC recently had to refund in overpaid taxes. A huge chunk of that cash comes from people just like you, freelancers, business owners, making advance payments that were way too high. Think about that. That's billions of pounds that should be in your bank account, not sitting with the tax man. So what are these payments? Well, they're called payments on account. Here's the deal. If your final tax bill is more than £1,000 and most of your tax wasn't already paid through, say, an employer, HMRC asks you to prepay your next bill, and you do it in two big chunks, based entirely on what you earned last year.
And this quote from a freelance photographer, wow, it just perfectly captures that feeling, doesn't it? It sums up the cash flow trap. A great year is absolutely something to celebrate, but it can set you up for a massive financial struggle the next year if your income fluctuates, which, let's be real, it does for most of us.
So is there a way out? Do you just have to suck it up and wait for a refund months down the line? Absolutely not. Thankfully, HMRC has a specific tool designed for exactly this situation, and that solution is the SA303 Form. So this is it, the SA303 Form. You can think of it like a course correction for your taxes. It's your official way of raising your hand and telling HMRC, hey, hold on a second, my circumstances have changed and my income this year is going to be lower. It's how you formally ask them to reduce those advance payments down to something much more realistic. Okay, now this is super important because this is where a lot of people get mixed up. The SA303 is not the same as an SA302. The easiest way to remember it is this. The SA303 is a proactive tool you use to change the future. The SA302, on the other hand, is a summary of the past. It's proof of a tax return you've already filed. Totally different jobs. All right, so we know what it is, but when should you actually be reaching for this form? Well, there are really three key situations where filing an SA303 makes total sense. Let's walk through them. So, have a think. Does any of this sound familiar? First, and this is the most obvious one, your business profits are going to be lower this year. Second, maybe your tax reliefs are going up. Let's say you've started putting a lot more into your pension. Or third, maybe you've started a part-time job, so more of your tax is already being paid automatically. If any of those tick a box for you, you've got a great reason to file. Okay, so the theory sounds great, but how do you actually do this? What's the process? Let's get practical. The good news is it's probably more straightforward than you're imagining. It really boils down to three simple steps. First, and honestly, this is the most critical part, you have to carefully estimate what your new tax bill will be for the current year. You've got to be realistic here. Second, you just access the form, which is easiest to do right from your online HMRC account. And finally, you submit it before the payment deadline. That's it. But a quick word of caution here. You got to be smart about this. The biggest mistake you can make is being way too optimistic and cutting your payments by too much. If you end up underpaying, HMRC will charge you interest. So be realistic, don't miss that deadline, and please always make sure you're using the latest form from the gov.uk website. And that whole risk of getting the numbers wrong, well, it brings us to a really important point. That first step, calculating your new liability, is absolutely everything. Getting it right is so important for your financial health and, your peace of mind, which is why sometimes it's smart to get some expert help. Look, if you're feeling even a little bit unsure about your estimates, or you just want a professional pair of eyes to check over your work, it's a great idea. The team at Pro Tax Accountant can help you with the SA303 form or any other part of your self-assessment. You can reach them on WhatsApp or by phone at 07956 89912, or just drop them an email at info@protaxaccountant.co.uk. And hey, for more fantastic guides just like this one to help you navigate UK tax, make sure you hit subscribe on the Pro Tax Accountant YouTube channel. Thanks so much for joining us, and remember, when you take control of your tax payments,
you are taking control of your cash flow.